The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.
And joining us now here on Market Talk as we take a recap of Thursday's market action, Brian Doherty with Total Farm Marketing joins us on the show here today. Brian, good to have you back on with us here this week. And as I take a look at some of that market action, kind of a disappointing day for the soy complex really across the board. It looked like those weekly export sales were pretty poor as well on Thursday morning, Brian.
Yeah, it depends how you want to look at it. So I look at the numbers were pretty steady, but the trade was disappointing in the bean number, or at least it's looking for a reason to rationalize beans down today, and they were down. Other rationalizations, product values were lower today. Maybe some increased rain in the forecast. Argentina had a pretty hot, dry forecast yesterday, the next 10 days, and that might have been revised a little bit wetter now, a little sooner. So we'll have to see with that. Suffice it to say, when I look at the export sales number, soybeans at 20.6 million. It's not a great number. It's not a train wreck. Corn, 37.6. That's respectable. And corn really reacted today as such. If you were looking at just that number, trading down only 0.5 cent. But beans were the loser. The product values continue to soften. I'll tell you, I think the anchor in the bean complex is just the combination of talking of more crush, so you have more meal, and the oil isn't picking up the slack. Other countries are not buying it hand over fist, first of all. Second of all, animal fats and other substitutes are also in the play. And just demand for fuels. You've got more rigs online now in the U.S. for crude oil production. So just a lot of things out there that seem to be keeping the soybean oil, hitting its lowest level of the year here.
Well, and I look at these markets as well, Brian, and I see, the wheat trade having a decent day. It's had a couple days strung together, and we've had some lower dollar action. We've had a lot of economic data out this week as well for the U.S. with GDP, but also a lot of this Chinese stimulus, too. That seems to be a big talking point here throughout this entire grain trade as well this week, it seems, Brian.
It does. And you know what was impressive about wheat today? Not today's close. It wasn't anything crazy or wild, but Kansas City did all right. You had the May up 8 cents, March up 11 1/4. Chicago wheat, though, a half to 1 3/4 higher, with May closing today at 6.22. March Chicago wheat up 1.5 pennies, 6.12. But we had a really good day yesterday. It got through some major moving averages on the charts and just closed a little bit above them. Prices went back under them today and then came right back. And so I've got to be somewhat encouraged by the technical signs we're starting to see in the wheat complex. Plus, you might argue that you had a very kind of narrow downward channel line here that the market broke through pretty decisively yesterday. So the technicals are looking a little better. But big picture perspective there is that from a worldwide view, and we've talked about this before, there's not a lot of room to err for the world on production this year for those countries that export wheat. And so maybe building a little more price premium in. It's not a lot, but building some price premium to where the market bottomed, which is already getting fairly behind the market. That was the end of November when the market bottomed. So wheat is kind of the where the light might be shining right now, even though it's not changing much. The demand side and supply side look like they're improving.
Some folks have brought this up to me, and I'll ask you the same question here, Brian. Looking at charts and stochastics and all the different technical indicators out here in these grain markets, some folks are arguing that we're building a solid base here, so to speak, across the board. Do you see that? Do you think that's the case here in these grain markets as a whole? Are we building a base right now?
Oh, let's break that up. In the wheat, absolutely, you're building a base. As an example, the March wheat contract, just for what it's worth, as you said, where's it trade? It's traded at 6.12. It was trading at 6.12 back in September. That's a lot of months. So you got about 6 to 7 months there where the market has been trading at the same price. We've been higher, we've been lower, but if you look at a chart, you're really carving out a really nice sideways pattern with a low and a high where you kind of spiked on both. So when you narrow that trend in, you can really make that arguably the case. Now let's jump over to corn. So corn had all this volatility, and when you break it down though into the when I say volatility, after the USDA report, new lows, and then we've been kind of consolidating, trying to grind a little bit higher. But when I look at the weekly chart, still big downtrend. I can't get away from that. But if you look at the price this week so far, trading 6 1/4 higher. Last week's close on the weekly charts had the contract finishing the week at 445.5, and the week before finished at just a little bit, just a penny and a half higher than that, finished at 447. Mm-hmm. So when you think about the last 3 weeks, you've got 3 weeks of consolidation. We got past that first week of January, and now we're consolidating the market very well. I can't tell you that we've turned the trend, but I'm impressed with that. And then if we look at the last, I'll just quickly go through that bean complex, or I'll just go through the bean market itself. On the weekly charts here on January 8th, March beans closed 1224 1/4. Where are they today? 1223. 3 weeks of consolidation so far.
Yeah, and so I appreciate you breaking those down for us. And it really feels like, as we look at the grains, I know a lot of farmers, there is plenty of unpriced commodity out there, unpriced bushels out there still. Some folks are looking at this market, they're scratching their heads a little bit. So give us some perspective here, risk management wise, Brian. I mean, anything stand out to you for folks to think about here in the grains at this juncture right now?
Well, let's go back to what we just talked about. We're consolidating in the marketplace right now. And part of that consolidation occurs when the market tries to rally, it runs out of gas because farmers have product to sell, and they are selling it, and they need to sell it. And so when I look at the price patterns we've seen and then talk to farmers, I get a sense that, we're in one of those periods right now that the market just has to grind through the supply. And every day is just a few more bushels less on hand that we have. And then you got weather markets that become more important in the southern hemisphere in the weeks and months ahead, and then the northern hemisphere. But more from a perspective of what can you do? What should I do? No easy answers right now. If you're one that usually says, hey, I like to sell call options and collect premium and challenge to move higher, volatility is low. Not a lot of premium. You can do it, but you got to be careful. But puts are cheaply priced too compared to in a volatile window. So I might encourage that farmers, if they're in doubt, still buy puts against the market, particularly on the rallies if you don't want to lock in cash. Otherwise, just be steady Eddie. Keep selling the cash. If you sell the cash, generate the cash flow, get rid of the market risk, go back in, buy something out to July or even September on the option front. You buy a call option or bull call spread and put yourself back in the game. If anybody can tell me or anybody else what Brazil is going to look like 90 days from now, hats off to you. I can very well guess. But boy, if they have any kind of weather event or problems, all of a sudden we rally up, and that's not when you should chase the market with calls. You should be buying the calls in low volatility at low prices.
Brian, over in the livestock trade, saw some good gains in the cattle complex, both fats and feeders on the day Thursday. Hogs, a little bit of green on the screen there. Any notes for us in that protein sector as a whole here today?
Yeah, big, heavy, short cover rally in the feeders. We've seen this now. We're up 3 weeks and 4 weeks in a row. 5 weeks ago, we consolidated in the weekly charts, got above some key moving averages, some really good demand there. Bottom line is what we continue to hear from our producers is they just aren't out there, right? So the board was beat up, but cash told us something different in the feeders. Now, when we look at the cattle complex today, solid gains, $132 in October, all the way to $237 here in the nearby February, $235 in April. Again, sticking with that friendly bias, cash prices are said to be $2 higher on bids today, and they're not sure they're getting the cattle in. So really good numbers, also reflective on some nasty weather here the last couple of weeks as well. Probably kept that weight gain somewhat in check, movement in check, and just demand is there. It's not roaring, but we're really starting to see a good technical looking chart. And I think that's part of it here. If I were short cattle and was trying to hang on, I probably have been moving out of my shorts this week or last week. It doesn't look like a market that wants to bend to the downside right now. And you're heading into that seasonal. I use the word seasonal for, let's just call it the next several months, where cattle prices typically have their strength.
Brian, any final notes for us here today before we let you go? Anything else you want to mention or reiterate for our listeners today?
Oh, just one view. We'll look at the milk market. Finally seeing some good greens today. Probably some short covering there too. Maybe following the cattle complex up. But in general, I think just keep a sharp pencil to everything here. I continue to kind of encourage producers, farmers who produce that. Well, and even those who, it depends how you produce. But let's take it from the corn producer or the cattle producer or hog. You have your production requirements and responsibilities. Keep an eye on the marketing side of things. Take time to really look at that. We need to keep a sharp pencil and look for every opportunity and turn over every rock. So again, just be vigilant. Look for opportunities. We're not in markets right now, other than maybe cattle that are going to all of a sudden hit home runs. So we need a lot of base hits to kind of keep this game afloat. Stay at it. One bias. I don't want to be too wordy here, but. I think there's a little bit said to be thinking about next year, maybe quite a bit. It might be easier to try and farm at an area that's break even or a little bit of profit than to end up taking big losses if you're just waiting. Because if you just wait, we might have good production next year. So there's just a lot of wheels that are turning that we really need to talk about.
Brian, if folks want to reach out to you and ask some questions there at Total Farm Marketing, how can they get a hold of you?
I would ask Jesse, they give me a call, 800-334 9779. Again, 800-334-9779. Best way to reach me and ask me questions. Otherwise, Brian with a Y at totalfarmmarketing.com. Shoot me an email or check out our website, totalfarmmarketing.com.
With that, Brian Doherty with Total Farm Marketing. Appreciate you being flexible with my travel schedule today. Thanks for joining us. We'll talk to you again soon.
My pleasure. Another week in the books, Jesse. Thank you. Stay safe.